Welcome to today's Financial Forensics Intelligence Briefing. Visit our website asinvestigate.com. In this episode, we analyze signals emerging from global stock markets and examine how financial forensics techniques reveal hidden indicators about public companies, capital flows, and strategic economic positioning. The focus is on intelligence signals that investors, analysts, and investigators should monitor when evaluating corporate transparency and market stability. Let's begin with the global market environment. Recent trading cycles have shown volatility across major equity markets driven by macroeconomic pressure, geopolitical uncertainty, and shifts in institutional positioning. In financial forensics, volatility itself is not the main signal. Analysts instead focus on behavioral anomalies, patterns that suggest asymmetric information, strategic accumulation, or concealed financial stress. One of the most important indicators is unusual trading volume before corporate disclosures. When activity increases without clear public catalysts, analysts typically examine three areas. First, insider timing patterns. Executives and institutional stakeholders must disclose their transactions, but clusters of trades, especially before earnings revisions or major announcements, may indicate early information diffusion inside corporate networks. Second, derivatives positioning. Options markets often reveal expectations before they appear in equity prices. Large call or put positions concentrated in short-term expirations can signal that sophisticated investors anticipate significant developments. Third, cross-market correlations. Financial forensics does not analyze equities in isolation. Signals may appear when movements in bonds, commodities, or currencies align with activity in a particular company or sector. For example, changes in credit default swaps or bond yields may indicate rising perceived risk before analysts revise ratings. Now let's turn to public company analysis. Traditional equity research focuses on revenue growth and earnings. Financial forensics looks deeper at the structural integrity of financial statements. Key indicators include cash flow inconsistencies, when operating cash flow diverges significantly from reported earnings across several quarters. Related party transactions, complex networks of subsidiaries or offshore intermediaries that can obscure the true destination of capital flows. Balance sheet expansion without operational justification, increases in goodwill, intangible assets, or inventories without proportional revenue growth. Another area analysts monitor is share buyback behavior. While buybacks can return value to shareholders, they can also stabilize stock prices artificially, particularly when executive compensation is linked to short-term share performance. Looking at global intelligence indicators, several trends are worth monitoring. Sovereign influence in strategic sectors such as energy, semiconductors, and telecommunications. Capital rotation toward defense, cybersecurity, and supply chain infrastructure industries. Private equity and sovereign wealth funds accumulating positions in companies controlling critical technologies or resource supply chains. These capital movements often precede policy changes or industrial strategies. In intelligence terms, capital flows can act as early indicators of geopolitical priorities. Another growing signal is information asymmetry driven by alternative data. Institutional investors increasingly use satellite imagery, logistics tracking, and digital footprint analysis to estimate real economic activity before official financial reports are released. When these datasets contradict corporate guidance, markets may react quickly once discrepancies emerge. A key principle of financial forensics is that patterns matter more than isolated events. A single unusual trade or accounting anomaly rarely proves misconduct. But when several indicators align, volume spikes, derivatives positioning, cash flow discrepancies, and insider activity, the probability of undisclosed information increases significantly. The goal of financial forensics is not only prediction, but situational awareness. Financial markets are information ecosystems where every transaction leaves a trace. With the right analytical framework, those traces become intelligence. That concludes today's financial forensics briefing. For deeper investigations and intelligence-driven financial analysis, visit asinvestigate.com.